Hello friends, this is Raj Sastry from Raj Option Trading. Today is February 11, 2022. Let's talk about New Relic. New Relic can help you debug your multiple platform, your applications, and make sure you're on top of your game. So with that, let's jump in and take a look at New Relic. Stock plunged big time after the earnings. Let's see if it's good time to buy some New Relic. So we look at the company overview, competitive landscape, and look at few charts and do a deep dive on New Relic and look at the financial summary and compare few stocks in the same sector and do a final verdict. So with that, let's jump in. So from a CEO and leadership perspective, look, we got a very good rating for the CEO here, 95% of rating for Bill Staples, who is the CEO here. And this company helps to monitor, debug, and improve your entire stack. You might have hardware, software, infrastructure. This company can help you to really debug and improve and observe and monitor your entire stack. I say from a management perspective, management checks out and the CEO checks out here with a very good rating here. So with that, let's go into a little more detail. Look, their platform will help you look at your entire infrastructure and monitor and see what's going on in your entire software and hardware stack. They got very good looking dashboard here which helps you to monitor your entire infrastructure. So with that, let's go into some more detail. Look, we got New Relic here. It's a software as a service or a SaaS company, as many of you know. They got this platform to really help you build, deploy, and operate software worldwide. And stock price is around $76 after the huge drop here, and market cap is about $5 billion. Look, stock is at $76 right now and it dropped big time here. And right now, after this huge big drop, look here, huge drop here. Right now, it's at 76. And all-time high in 52-week was about $129. You are getting it at a very good price here. Look, it's almost close to 52-week low here, so it's a good price to buy. And you know what happened here, right? Look, the stock plunges after the guidance disappoints. So it looks like they did some guidance, low guidance here, mainly because their top line is improving, which is very good, but the bottom line or the expense that's also going higher. Analysts are not liking the expense going higher. And from an analyst rating perspective, we got 4 buy here and 4 hold. That's why right now it's a moderate buy. So with that, let's go into a few more details here. Look, from a target perspective, we got a high target of 140 here and low target of 90. Stock price is much below all these targets right now. And right now, from a technical perspective, we're in a sell zone. I say start looking at this company slowly and accumulate a nice position. This should bounce back very nicely. So with that, let's jump in and look at the competitive landscape. So let's look at few companies here. Top of the list, we got New Relic. Look, stock got clobbered here, down 23% in last 5 days. And also look, insiders are selling. That's not a great sign here. A lot of insider selling going on here. And they got good sales and nice sales growth. Top line growth is good here, but look at the bottom line. Net margin is negative. They are not doing well in the bottom line, and they got also some debt on the balance sheet. Stock is sold off big time, as you can see here. IV percentile is very high for those folks who want to sell some put option underneath. You could do that slowly. And look, they're down big time from 52-week high. Even up here, they're nicely up high for 52 for 5 year. And we got a few more as you see here. Keep watching the RSI here. Look at the low RSI candidates. Like Adobe is one of my favorite. You could buy that one here. And I also like GoDaddy and Akamai. Akamai is one of my favorite. And Oracle is a great one with the Safra cats. You could buy that one too. And we got a few more like Microsoft is a good one here. And we got ATEN is a good one. Look, AFRM got clocked here, clobbered big time. Look at the 5, look at the 1-day drop here, 21%. You could slowly start buying as it comes down here. On the other hand, other companies like Splunk is doing well. It's a direct competitor to New Relic that's doing very well. And we also have Datadog, which is again a competitor. Datadog did great after the quarterly earnings. Stock jumped much higher. So with that, let's look at these companies and look at their future projections. So from a future projection perspective, keep watching here. We got the target price and the growth for next year from an earnings per share perspective, and also growth for next year from a revenue perspective. I like the companies with nice high overall score here. Look, we got Adobe, GoDaddy, Oracle, all this with nice high overall score. That tells you these companies are doing well from a growth, profitability, and valuation perspective compared to the industry. That's why I like those companies. And you should slowly look into those names here. And we got a few more with nice overall score here. Look, Microsoft as well as Mime with very nice score here. You could look at them also. And then you got a few more ATEN, very low price stock here, just $13. Look, it's got a nice overall rating of 82 here, and nice performance when it comes to 5 year. And we got a couple more with high ratings here. Look, Pags beaten down Brazilian play here. You could buy this one also. Nice overall growth here. Nice projection for the future. Stock price is $17, and 12-month high, 12-month projection or a target is $38. Nice revenue and EPS growth for next year. I would be buyer of that one also here. And then finally, we got Vmware, one of my favorite here. Stock is trying to go higher. I would wait for a little pullback here. If it pulls back, look, RSI is high. I would not recommend buying now, but you could buy on a pullback here. So with that, let's go into a little more detail. From a stock chart perspective, look, New Relic, look, huge big drop here, gap down. That's why I think at this point it could be okay to buy this company. As you see here, earnings, stock went higher, earnings, stock went higher, earnings, stock went higher. They cannot keep doing it all the time. That's why it came down here at this time. Look, there's a small candle here, green candle, indicating it might go higher. So I'll be slowly buying it, accumulating, and wait for a bounce. So at this time, it's really filling this gap here. Just came down below the gap. Stock went higher. Now it's came down below the gap, and nice support level, as you can see here. It can go higher from here. And then you got Adobe. Adobe is a great stock. Stock came down tumbling here. It's a very good buy here. Look, smart money is slowly buying. It's getting stabilized here. And GoDaddy also came down big time. Look, came down here. Right now RSI is 46, tells you could buy here. Smart money is wondering what to do. It's not going in yet, but you could slowly buy this one also. Look, it's came down big time, went higher, came down, went up here. Could be a short squeeze. Now it's a good time to slowly start buying this one. Akamai is one of my favorite here. This company, as you can see, are doing nicely. On the balance volume is also steady. Right now RSI is 47, tells the stock is sold off here. You could buy this one also. All right, let's look at a few more here. We got Oracle. Oracle is one of my favorite. Anytime Oracle does something like this here and tries to consolidate, it's always a good time to buy. Look, on the balance volume is picking up. That tells you Oracle is a good one to buy. This company also bought Cerner and trying to expand into healthcare, healthcare IT. I think it's a good company to buy here. And then you got Mcafee. Mcafee, look, it's trying to go higher, and stock is kind of stable here. So I think Mcafee, you should take a look at, probably let it come down here. RSI is a little high for me right now. And then you got ATEN here. ATEN also got clocked here. On the balance volume is steady. You could buy some ATEN here. AFRM stock came tumbling, as you can see here. High multiple stock. I would say wait for a couple of days. You can start buying this one here. It's a good one. All right. Now let's look at New Relic and do a quick deep dive. From a New Relic, look, it's got a recommendation, analyst recommendation of buy. So this tells you analysts are bullish about this company here. And then we got its IPO back in 2014. It's been in the market for a while, nicely down from 52 week, as you can see here, 40% down. and it's got a high short float, so this can really cause a short squeeze as we go forward. And look, put call ratio is high. That tells you a lot of people are hedging and buying put options, protecting themselves. You got high short ratio, and also there is high put activity. That's why, when the stock goes higher, both these constituents can get really impacted. They can cover, that can cause the stock to go higher. And it's a, it kind of trades along with the S&P 500 0.9, so it's not a high beta stock at all. And it's got nice growth for the future. Look, we got next year sales growth and 5-year sales growth. This is the previous sales growth here, past sales growth, and a good sales growth from a quarterly, yearly, and a 5-year perspective. From a price to sales ratio perspective, this one is not expensive. This is not expensive at all. And as we look through here, we got EPS growth for next year. This is where analysts are projecting nice EPS growth and sales growth for next year. That's why it's a good one to buy into this downturn here. Right now, it's in a tough situation with the free cash flow negative here. So they got to control their expenses. That's why analysts are not liking it right now. And company not making money. Look, net margin is negative here. That's why Wall Street does not like this company at present. Performance wise, nothing great here. It's down big time, as you see here. Down for 1 day, 5 day, 10 day, 1 month, and even up to 6 months also is down. That's why it's a beaten down stock here. You could slowly start buying this company here. And look, RSI perspective, ignore the RSI. Looks like it's not the right number, but it's a low RSI candidate here. And IV percentile is high. You could sell some put option, and it's squarely below its 50-day moving average as well as 200-day moving average at this time. Institutions own big chunk of this company, and right now it's got financial grade, C grade from Morningstar here, nice growth grade, and Piotrowski F score tells you they got to improve their financials. Their financials are not doing great at this time. Altman Z score 2.9 tells you they got enough money, company is not going to go bankrupt. So with that, let's go into a little more detail. Look, from an earnings per share perspective, this is where they got to control their bottom line here and improve. I don't like this direction here. They got to improve this one here. Top line sales is good from a year-over-year perspective. I think I can handle this dilution, not too much at all. Very slow dilution, not a big deal here. Quarterly earnings are going higher. That's good here. They're also putting money into R&D and make their platform as a solid monitoring observability platform. That's also a good thing here. But they are spending more money here. Net income, as you can see here, trending down. It went a little higher, but this is the concern. The bottom line is the concern. They got to control their expenses. They're doing good on the top line here. If they start controlling their bottom line and improve this earnings per share and also improve this net income situation, stock can go higher. All right, now let's look at the quarterly numbers here and see what's going on here. Look, stock price was $109 back in 2021, and now it's 76, a huge 30% drop. And look, stock has been dropping in the past also. There is a 6% drop here, 18% drop in 9/30 quarter here, and 30% drop here, right here. Look, it's a 331. And now we are in February, so 30% drop here. It improved that, and next quarter 49% improvement. I expect something similar, 30% drop here, and next quarterly earnings you could see around say 30-40% improvement or a bounce. That's what is in store for this company here. And look, from a sales perspective, they have exceeded the sales expectations here. Top line, there is no issue. They've done nicely from a top line growth perspective. Earnings per share is also it's not improving. It's in a other direction here. That's why they have to really streamline their bottom line here, improve earnings per share. And from a cash perspective, look, cash is okay. They got around $780 million cash. It looks like, if they're slowly burning the cash. As you can see here, it was high, it became a little bit low. So you got to watch this carefully. They got to improve their bottom line scenario here. Total debt, they're okay, they're controlling the debt here, not big deal here. Debt to equity ratio is also little high. They got to control this. This happens when the equity or the stock price comes down. Free cash flow is negative, but it's improving. That's good here. Margin, they're taking some hit on the margin by 1 point. Wall Street does not like it. Operating margin also increasing. Operating margin is increasing on the negative side. That's not good here. Net margin also, look, it's becoming negative and becoming on the higher side on the negative. Not great. So that's why they got to control their bottom line here. That's what is going on here. All right. Now let's look at the stock chart. From a stock chart perspective, look, it's a 5-year weekly chart. Stock went higher. Look, nice uptick here back in um, uh, 20, 2017 time frame, 2018. Stock came down big time here. This was 2018. Then stock went higher, as you can see here. Now huge big drop here. So that's why at this time, this stock is known for bouncing up and down. Nice valley, good peak here. Nice valley consolidation and going higher, came down big time. At this time, I think it's good to buy. And this from the historic move of this company, this always bounces back nicely. All right, now let's look at a 2-year 1-day chart here. The reason I bring it up is I want to show how this stock trades around the earnings. Look, there's an earning here, and stock went higher. And one more earning, stock was went higher before the earning. Stock came down, then went higher. One more earning here, stock are down before the earning. Stock went higher. One more earning, look, stock came down. And one more earnings, after that stock bounced back, came down, bounced back again. So this is a one of those stocks which if it crashes big time, it always bounces back. That's why if you're a swing trader, it's a good opportunity for you. Stock came down tumbling. Look, there is always a small bounce in play here. That's why you could buy this for a bounce. All right, now let's look at technicals here and see what's going on here. From a technical perspective, look, huge big plunge here, and chart is ugly. DMI, red line on top, blue line on the bottom, squarely bearish at this time. Smart money is moving out. This is when we slowly start buying the company and hold it for a quarter or so for a nice big bounce, say 30 to 40% bounce. So with that, look, let's compare a few companies here and go from there. New Relic, $76, and keep watching what's going on here. New Relic is down big time, 41% from 52-week high here. Whereas Datadog here, which is one of the competitors, they're doing great here. They're just down 12% from 52-week high. And we got other platforms like SPLK, which is also improving, down 33%, better than New Relic here. And then you got a few great stocks like Akamai seems to be doing pretty well here. Mcafee is also doing okay. You got Oracle, which is one of my favorite stock here. It's also down. You could buy that one also. Now let's look at the net margin situation. Keep watching the net margin here. And there are a few companies turning the corner here. Look, Datadog is, it's going to become a net margin positive company soon. Wall Street likes this company. That's why stock went higher. If this stock gets clocked, I will be buying some Datadog. And then you got Splunk again, big time down. It's this stock is not getting its groove off late. It's good to slowly accumulate into the down days. Oracle net margin positive, I like it. Adobe, great one here. Akamai is a good one. Mcafee is also a good one here. And GoDaddy and Anaplan also good, beaten down big time. And then let's look at the key free cash flow here. Look, some of the companies are struggling from free cash flow, like New Relic and Splunk, both are struggling. But Datadog has done well in the last quarter. Look, nice free cash flow positive here. And you can't compare with Oracle. Great free cash flow here, along with Adobe. They're doing great. And Mcafee is also doing very well here, and GoDaddy is also okay. Anaplan is struggling from a free cash flow perspective. From a valuation perspective, look, right now New Relic is a low valuation, Datadog is a high valuation stock here, and Splunk is low. Oracle is a great buy here. I would be buying Oracle. Adobe is little high valuation but still a great stock. Akamai is a good one to buy. And now let's look at relative strength index. Look, some of these stocks are sold off here. New Relic is completely sold off. A good entry point here, RSI 28. Datadog went higher after the quarterly earnings. I would wait for that one. And look, all these stocks, Splunk, Oracle, Adobe, all these are low RSI here. Especially Adobe. Look, this is a bargain here. You could buy Adobe into this big sell-off here. And Mcafee is too high, I would wait. Others are good from an entry point perspective. And from a financial perspective, look, Altman Z-score, which is the best financial indicator in the market. It tells you New Relic has got good money, good financial positioning. You don't need to worry. Whereas Splunk is a little tough on the, they don't have too much money here. That's why it's 1.4. And Oracle is a big company. I would not worry about its cash positioning. Larry Ellison has got a lot of money. He can withstand any market downturn. And we got Mcafee a little bit low here, and also GoDaddy a little bit lower on the cash position. But I've seen GoDaddy over the period of time, they seem to be doing very well. And from a financials, Piotrowski F score perspective, look, New Relic has got a little bit lower score. Tells you books are not improving in past couple of years. So we got to be a little bit careful. Could be okay to buy on this dip here, but not for your retirement portfolio. For your retirement portfolio, go with the nice Piotrowski F score, like Adobe checks out here, Oracle checks out. You could go with those names for your retirement portfolio. Even Akamai is good, if you buy when it's down like right now. And look, Mcafee is a good one here with nice 8 score. Also, ATEN has got a nice score. Tells you books are improving. Now, from an overall rating perspective, right now, New Relic is a bounce candidate. I will be buying for a nice bounce. But look, there are a few names with a nice overall score here. Number 1 score goes to Adobe with a nice 94 as the overall score. And number 2, actually number 1 goes to Akamai with a nice score. Number 2, Adobe. And then you got number 3, we got GoDaddy. Actually, number 3 is ATEN. Number 4, GoDaddy here. Then comes Oracle. So I would go in that order here and then buy them slowly. So with that, you might wonder, what should I do with my New Relic right now? So New Relic, they were plunging big time here, 29% on Wednesday after issuing the fourth quarter guidance, which frightened investors because guidance was not great, very soft. And from a top line perspective, they're doing well here. There is a good revenue growth, 18% year over year. So that's a good one here. And their total paying accounts grew nicely. That's also a good one here. But the problem is, in order to go after top line growth, they want more revenue. They're taking on higher cost. So Wall Street does not like taking on higher cost and taking some margin hit. That's why stock got clocked here. That's why it's a good buying opportunity here. I would be slowly buying and accumulating this stock. They will do very nicely. I've seen this stock over the years. Whenever they get hit badly, like right now, they are always mad to bounce back. That's why I recommend buying this moderately. So with that, thank you very much. Happy investing and trading. Please subscribe.